Well, some oil marketing companies have begun reviewing prices at the pumps. They were expected to do so over the weekend. But today we are seeing that materialize. Guel has taken the lead, selling a litre of petrol at 12 cedis 65 pesos, diesel going for 12 cedis 84 pesos. Also, Star Oil selling a litre of petrol at 11 cedis 69 pesos, whilst diesel going for 12 cedis 69 pesos a litre. Now, the adjustment shows that petrol has gone down a little over 2%, whilst diesel has been reviewed by almost 5%. It is expected that more OMCs would adjust prices at the pumps downwards later today. Oil prices have surged after several of the world's largest exporters announced the price cuts in production. That's the other twist to this story. The price of Brent crude trading above $84 a barrel after jumping by more than 5%. The increase came after Saudi Arabia, Iraq, and several Gulf states said on Sunday they were cutting output by more than 1 million barrels of oil a day. So question now, are we going to see the reductions we are seeing in Ghana here sustained as oil prices are beginning to surge on the global markets? Joining us on Zoom, Dr. Yusuf Sulemana, who is an energy expert, to delve into this matter. Good afternoon to you. Thanks for joining us. So explain to us what is happening on the international markets, for which reason oil prices are beginning to soar.
Thank you very much. Good afternoon to you, Darrell, and good afternoon to the viewers. Yes, indeed, it came as a huge surprise to the market. Nobody expected OPEC to take this step at this moment in time, because if you look at the fundamentals, what should have urged OPEC to take that step would have been a weakening in demand. And if you look at the demand side of the continuum, you will realize that it's still robust. The single player or the single international player that is key for global oil demand is China. And if you remember, China had abandoned the zero policy of COVID. And so the expectation was that, in fact, demand was supposed to have increased. So all fundamentals were right. Demand was still very strong and resilient. So, but if you look at why OPEC did that, if you notice over last week, something happened in the financial market that was just out of blue. A bearish sentiment ran into the market where we had phenomenal collapse of some banks, and that cascaded into a potential, a demand drop, not physical demand drop, but a potential demand drop. And so you remember that deep oil prices to the 70s. And so, but after that, it has started to recover. So I'm just thinking that OPEC is just taking abundant caution because they have enjoyed this 80 barrels of oil per stream, per barrel within the market for the last 6 months. For the last quarter of last year, it's been 80s, and even up to the first quarter of this year, it's also been 80s. So I suspected that OPEC would have taken this step, and so they did. What they want to do is just to bring the oil back to the 80s, because they felt the 80s should be the comfortable zone for them. If you notice that, where it dropped, from where it dropped as a result of the banking crisis to the 70s, right, I don't read the oil was around 85, 86 when it dropped to the 70s. So I think they just wanted to trick the market. But of course, this is not a physical reduction in demand. In crude oil into the production basket. What we are seeing now is just as a result of sentiment. And of course, these bullish sentiments will always have impact on the market. So as it grows like this, we need to just watch out to see where it will settle. But it's actually unfortunate because we already had a supply card in place. This is not the only one. In fact, before this one, we had about 2.5 million, crude oil barrels of oil per stream day already cut by OPEC. So if you add this one and it crystallizes into the physical reduction in demand, in supply into the market, we'll have like over 3.5, 3.6 million of crude oil taken from the global basket. And that will mean that we are taking about 3 to 4% of the entire, what the global demand from the market. So yes, that will certainly have an impact in the market. So I'm not surprised that the market jumped instantly after this announcement.
Well, we're just beginning to embrace the idea of fuel prices declining here at the pumps. And so now we are seeing oil prices go up on the global markets. What are the implications of this on pricing locally?
Yeah, so it's unfortunate, but if this drop, this rise actually sustained, we're going to have a bit of heat at the pumps. But fortunately, at this moment in time, if you notice previously, the dynamics has changed a little bit. Three things will actually account for what the consumer pays. Of course, you have the exchange rates dynamics that comes to play, the crude oil prices on one part, and then the taxes. Holding the taxes constant, I think at this moment in time, the exchange rate has been phenomenal. I must say so. We haven't had that major increment. We haven't had that. In fact, if anything, we could potentially have appreciation in the exchange rate in terms of the cedi to dollar parity. So if the exchange rate actually sustains this momentum and it doesn't drop, then this increase in the global front may not have that significant rise at the pumps. But what it will definitely do is what we're expecting, the quantum dip or the quantum reduction that we're expecting at the pumps at this moment in time, it will reduce. If it is not sustained where it is, it will definitely, the reduction will be reduced. The reduction will not be that massive like we have been expecting it. In fact, if oil prices were around the 70s, I had projected that if after the banking crisis, the oil price dropped to the 70s, I was just expecting that we could hit a single digit. Unfortunately, it didn't go there. The confidence has returned to the market. The banking crisis, of course, the oil has started to recover, and now all out of blue, we are seeing this. So yes, we will have some bit of impact on the pump, but it's not going to be as drastic as the previous impact that we had because of the stability of the currency.
Well, I guess this is also a test for the Good for Oil program, because initially we've heard the government say, well, the fuel prices are dropping because of the Good for Oil program. And so if prices on the international market go up, I guess then we're going to see the real impact of the Good for Oil program. Isn't that the case?
Good one, Darrell. When it dropped, actually, you noticed that there were a lot of confusion as to what is accountable for this drop, whether good for oil was what is accountable or not. So indeed, as much as this is not a good one, but it brings a lot of clarity. If it sustains, if oil actually sustains within the 80s, then it brings a lot of clarity that whatever is causing the price to drop and the price actually dropping, then nobody will have any confrontation or any argument or any doubt with respect to what is causing the drop. Yeah, so yes, indeed, it's not good, but assuming now we still have the prices dropping, and indeed, if gold for oil should have impact on the exchange rate, at this moment, it is difficult to tell because a lot of parameters are coming to cause this exchange rate to be stable. We can't rule out gold for oil as a matter of fact for sure. It will also be part because, the pressure on the dollar would have been minimized for sure. But because of this, because these factors are aggregated, it is difficult to see which one is having the massive impact and to what percentage. So yes, indeed, if the oil sustains at this moment in time, and it will bring clarity, like rightly painted, whatever is causing the drop or whatever is causing the sustain in the rise at the pumps. But what is clear is that we're going to have a double gain in the sense that if oil prices within the global space were actually competitive, we're actually down in the 70s, and the exchange rate also being stable, then I was very sure that we could gravitate towards a single digit. But as of now, as the oil price started to go up, we might lose track on that aspect of it, the commodity price impact on the price build-up. But we need to wait, Darrell. This is just an instantaneous. It's just the market response. What we are seeing now is not a physical reduction in OPEC physical reduction from the market. It is just a sentimental response for the market with respect to the market, and that is normal in commodity market. So what we likely see is that getting to the mid of the week, you might see a drop or increase from this figure. This figure will not stay as this. You might see a drop. We hope there will be a drop and it will settle. But what is clear in the minds of OPEC is that they want oil prices above 80, and so that's how come they announce this. And they are actually successful in getting the oil price above the 80s.
All right, Dr. Isu Sulemana, energy strategist, I appreciate your time with us and the insight that you have given us.